So step one to upgrade your management accounts is preparation. Hi everyone, my name's Alicia and I am currently doing a mini series on how to upgrade your management accounts and why that's important. If you don't know why it's important and you're happy just churning out monthly management accounts, have a look at the introduction. I have left a link below. Otherwise, stay with me and I'll just take you through quickly how you can prepare for that upgrade. So the step one really is to do balance sheet reconciliations. I know it just really doesn't sound interesting, but it's actually will put you in good stead for your management accounts going forward. So as you may or may not know, if there are any skeletons in the closet in your financial statements, they are all on your balance sheet. So anything that shouldn't be there generally will be on your balance sheet. And when you're having to reconcile that, a lot of the time it has to be pushed through the P&L. So if you don't do balance sheet reconciliations, you will find that further, probably at year end when you're having to do balance sheet reconciliations, all of this historical differences will have to be pushed through the P&L, and your final month in the year, they just won't make sense, and you may have to even open up your profit and loss from earlier years. So it is really important that there are balance sheet reconciliations done on a monthly basis, because then your financial statements are clean and there is less of a chance that you will have to open up your P&L from prior periods and the numbers change. One of the quickest ways to ensure that nobody reads your management accounts is that the numbers keep changing and therefore nobody trusts them. And if you don't have anybody trusting your management accounts, then you definitely will not have anybody read them. So one way to do that is to ensure that the numbers are accurate by doing your balance sheet reconciliations. Obviously, accrual accounting and having good processes for accrual accounting is another way of making sure that the history doesn't change at all. So I would highly recommend spending the time to ensure that the balance sheets are reconciled on a monthly basis. The other way for preparing for that upgrade of management accounts is to make sure that your revenue and expenses are posted into the accounts on a consistent basis. So either if that's you that's doing all the postings or someone in your team or a third-party bookkeeper, you need to ensure that they know which costs and which revenues go where in your management accounts. Otherwise, again, if things are all over the place, it's really hard to do an analysis and it's really difficult to understand what is going on in your P&L and balance sheet. So make sure, whether you do that by putting in default accounts for the postings or you just have a spreadsheet, whatever it is, just make sure that it's consistent. And this is the same with revenue recognition. You want to ensure that your revenue recognition policy is the same across the board. So whether that is creating a revenue policy and to ensure that revenue is recognized accurately on a monthly basis, or if it's quite straightforward, just making sure that there's a good process and you want your expenses to be posted on the same basis. So not massively interesting, but more important than what you actually may have considered is balance sheet reconciliations and consistency with posting. So if you have both of those waxed, then you can move on to the next video that I'll be posting about structure. That is the next area that you need to look at in order to upgrade your management accounts. Thank you.